So this is the stock market of 2022 apparently. Another day and the S&P 500 is down almost another 2% here. Dow Jones loses 500 points, Nasdaq falls 3% as April sell-off resumes, led by tech stocks. US stocks fell sharply on Tuesday, continuing a vicious April sell-off as investors dumped shares on fears of an economic slowdown. And that right there is the main culprit. Whenever the Fed talks about raising rates, the point of that is to slow down economic growth and cool off inflation. And here's some nice data on the whole situation. So in light blue, we have the inflation rate in the US, and this dark, or I guess black line, is the interest rate. Of course, back in 2020, the inflation rate was cut to basically zero to help stimulate the economy. But the issue today, of course, is that the interest rate has been too low for too long, causing inflation to get out of hand. And this is actually already a little bit outdated because the interest rates already went up by 0.25%, and they might do a 0.5% rise in the coming months. And in terms of the actual GDP growth in the United States, we can see that we still have a good amount of growth considering the size of the US economy, although it is projected or forecasted to be less in the coming years. And another indication on the health of the economy is the unemployment rate. And here again, we can see it's back to pre-pandemic levels. So the fears of an economic slowdown and inflation getting out of hand, along with international conflict, is largely responsible for all of this crazy volatility as of late. And if you're like me and you're getting bored of this volatility and you just want to take advantage of it, check out my last video on that topic. But today's video is actually going to be a little bit different. We're going to be taking a look at the list of the best performing ETFs so far in 2022. And the point of this is to gain some kind of insight and knowledge on what's going on in the economy and where you can potentially make some money. So this should be a pretty fun, chillax video, and if you guys enjoy, we always appreciate a like and subscribing to the channel. Okay, so let's get into this. Let's begin with the description of what we're looking at here. So the following table lists the top 100 exchange-traded funds in terms of monthly returns. These are the 100 ETFs that have had the highest percent return over the last month, excluding leveraged and inverse products. So when looking at this list, the first thing we have to point out is that the top 3 names we have to disqualify because these are leverage and inverse products, which aren't supposed to be on the list. So aside from that, if we take a high-level look at this, we can notice a few things. So I see a lot of natural gas up here at the top with pretty high monthly returns. And when you do some research into the topic, we can see that natural gas has surged to highest levels since 2008 as Russia's war upends energy markets. And you guys can read this article if you want, I'll leave it linked down below. But I think most of us understand the current situation, how Russia is one of the globe's major producers of energy and natural gas, and the supply is now being restricted due to their current situation. And if we look at the price of natural gas over time, we can see how it's at near all-time highs due to the situation, and this largely explains why natural gas investments have performed so well in 2022. But it's not just natural gas. The whole commodity market has been on fire so far in 2022. In fact, here's a list of various commodity ETFs, and this is the year-to-date performance. And it's all a pretty similar story to natural gas. There's supply chain shortages, and global conflict doesn't help that. Just to name another commodity, wheat comes to mind because the whole Ukraine-Russia area is a pretty major wheat exporter, so that's having a huge impact on the supply chain and the price of these commodities. Okay, so in terms of the best performing investments so far in 2022, this is one trend: commodities and natural gas in particular. But if we continue to evaluate this list, another trend I keep seeing is interest rate hedges. So ticker PFIX is one of these said investments. And here's the fun description. So PFIX is actively managed to provide a hedge against a sharp increase in long-term interest rates. The fund holds OTC interest rate options, US Treasuries, and US inflation-protected securities. And here's another one in that same field, ticker RRH. And this is another actively managed multi-asset ETF that aims to profit during periods of rising interest rates. And if we take one of these and stack it up against the S&P 500, year to date, we can see the extreme outperformance, up 40% versus the S&P, which is down 11% in that same time. And of course, the reason why this strategy is working right now is because of the macro environment and the Fed raising interest rates. We can see that during times of recessions, the interest rates are cut to stimulate economic activity, but shortly thereafter, they tend to rise pretty sharply, and it seems like that's what's about to begin to happen here. And when you combine that with the fact that the the Fed is outwardly saying that they're going to be aggressively raising interest rates, it's no surprise that these kind of hedge investments are performing pretty well right now. Now, another trend that was very surprising to me on this list is all of these carbon allowances and offset ETFs. Ticker KRBN is one of them, and if we read the fund description, this seeks to track the carbon credit futures index that weighs holdings based off trade volume. And if you do some research into what exactly a carbon credit even is, you get this. So a carbon credit is a permit that allows the owner to emit a certain amount of carbon dioxide or other greenhouse gases. And I have to say, I'm really surprised to see so many of these performing so well in 2022 so far. And if we scroll down a bit further, the last one I want to point out here is the inclusion of consumer staple ETFs. We have an option from Investico, Spider, and even Vanguard, and the performance has been pretty modest with positive 5-ish%. And of course, when it comes to consumer staples, these are mostly large cap companies that have a lot of familiarity and stability in their products. Some examples here are food, beverages, tobacco, household and personal products, all the kinds of products that do well in a recession or a slowing down economy. Not quite as well as commodities like wheat as we saw previously, but these are kind of the next best thing. Okay, so what's the takeaway here? Well, so far, 2022 has been an extremely rough year for investors. Year to date, it's down almost 12%. But as we can see in this list here, there definitely are winners and groups of winners within the economy at the current moment. And those top performing investments are commodities, interest rate hedges, consumer staples, and the oddball is carbon credits. And when you put this in context of the larger macro environment of rising interest rates, high inflation, global conflict, supply chain shortages, it makes sense that commodities, consumer staples, and interest rate hedges are performing very well right now. That's going to do it for the video. Hope you guys enjoyed and got something out of it. If you did and you're still watching, you guys know we appreciate a like on the video, subscribe to the channel, and I'll see you guys in the next one.